So basically today I just wanted to cover because this is like a free session, right? So I didn't want to confuse a lot of people with like strategies and whatnot. So I wanted to actually talk about something that can benefit like every single trader. Whether you're using your trend line, whether you're using whatever strategy that you're using, and it all just comes down to risk management, you see. So the reason why I decided to focus on risk management because like whatever strategy you can use, you gotta if you risk properly, you can become profitable. Um, Even in the worst case scenario, you can become a break-even trader. So that's why I decided to focus on this risk management. It's a short document. There's a longer one, but then that's just reserved for later, like for basically the mainstream. So risk management is a fundament. It's fundamental for all your trading. We as market analysts, I don't like using the word forex trader because you're actually analyzing what's going on in the market and just predicting outcome. So we basically you need to learn how to manage your money. Most traders determine how much they can stomach in a single trade and move on to placing trades. That's not trading. I call that gambling because if you want to go into the market and then you basically going to be taking your capital and then say, okay, I'm cool with risking, and let's say you have like 5,000, right? And like I'm cool risking 2.5. That's not risk management. That's basically you saying, this is how much I feel comfortable of risking, and that can be detrimental to your trading. So, basically, how do you become like a good trader in terms of using great risk? So it takes money to make money. We all know that. You to to be a trader, you need capital basically, and that's something that's not spoken like loud. That you first need to raise your money and you need to save up. See, you need to have money that you save, and you know that okay, this is the money that I'm gonna trade with, and I'm gonna make sure that I utilize this cash because I'm not gonna get it anywhere else. See, then you also need to consider how you're gonna be educated. So these days you have like you have mentors, you have classes of the internet. So it just depends. You can actually use all three. You can have a mentor, you can attend classes, and you can basically use the internet. There's a lot of stuff on the internet. Because funny enough, when I started trading, then I didn't see the need of a mentor at the time. But then what happens when you actually go through the whole mentorship process is that when you being mentored, the whole process of trading is actually cut, like it's actually shorten the time frame that you take to learn all the information because you find that your mentor's already gone through all of these hurdles for you and then summarize the journey up just to make it easier. So it depends on how long you actually want to learn information. So you can use mentors, but use the right mentor. And of thirdly is that you need to know how to manage your capital. So don't get like 200 and 300 and then think I should start funding thingy in my account because 300 200 is not gonna like get you trading properly because what you're gonna do you're gonna think you're gonna blow that account and then now you're gonna keep on blowing that account and then this is how brokers actually make money. They capitalize off your small losses. So every single time you're actually funding with 300 rand in totally you're gonna fund like 10 times that's already 3k and you keep blowing that 300 because you need enough capital to weather your losses when it comes to trading because we all want to see developments in our trading and slow development actually it's annoying. It's not something that you just want to be in, you see, because if you want to use proper risk management and you want to trade 300 and the risk management I use is that I use 1%, I risk 1% per trade. So that means I'll be risking 3 rand per trade and hoping for 1 to 3, which is like 9 rand. So every single trade I get and it's a winning trade, I stand to make 9 rand when I'm gonna make my actual capital back. See, so the minimum you need to actually start an account is like roughly 5K to 10K. Reason being is that if you're going to be risking properly and you're going to be trading properly, you're going to need a lot of capital. And these days, I was actually talking to the mainstream students that there are prop firms and people should actually use these prop firms before there's no other solution, because you can find that you're going to be comfortable trading with your own capital for like a long time and you're not going to see improvements, and by the time you start using your prop firms like FTM or my forex finds, they god forbid, but then something else is happening to them and then they can't provide any more accounts to trade. See, so that's why I always encourage like a pro firm account only costs like there's a 5K, there's a $5,000 one that just opened on my first one. That one actually costs like 800 Rand to actually sign up, and then you just need to just pass the phase one and phase two. But then I'll actually show you guys. So what happens if you don't use risk? So let's say you have $100,000 and you lose $50,000. That's 50% of your capital gone straight, and that's not a good feeling. Trust me, like losing that much money so quick, and like trust me, with the market that money can just go quick, like within like a minute it's gone. It only takes 1 minute candle, and if you want to be trading Nasdaq, which is like fast, trust me, it only takes 30 seconds for you to lose 50,000 if you have like the wrong leverage and you're not risking properly. Because I've been seeing a lot, like see, during my trading journey, I've seen dudes use lot size of like 10, but then the accounts are just like not that big. And you find that as soon as they actually enter their trade, like 50 or 75% of the capital is gone. And then the rest of the 35, they're just hoping by luck that it doesn't go away. Like they're just hoping that the market is kind to them and allows them to actually get out. Because if you have proper risk management, trust me, your psychology is going to be better. Because once you're in a trade and you know that, okay, I'm going to be risking 1%, your mind is already prepared that I'm going to risk 1%. And if this trade goes against me, it goes against me. And you help yourself, because there's this thing of traders when they see that, okay, they enter in the trade and they're hoping for it to go their direction, they're going to be adjusting their stop losses, entering more trades just to cover up losses, because once that stop loss hits, trust me, you're going to have the urge to actually enter the game and then try and make back the money that you lost. And that time that you enter again, you're going to be using a lot size and a wider stop loss. And what's going to happen? You're going to eat through more of your capital. Because I have a rule when I'm trading. I ju- it, it's so my rule when I'm trading is that I I have a rule of 4 trades a day, 1% each. So if I'm trading a $10,000 account, that means that I'm only losing $400 a day, and I don't lose more than $400 a day, because once you start going up higher, that's like big risk. See, so basically you it's called drawdown when you start losing series of trades. So you calculate drawdown by the initial amounts that you invested and the account. If you're in a loss, then you take that loss amount and you minus it from the capital you have. So that amount remaining is called drawdown. So in trading, we always look for an edge. No one wants to lose. Everyone wants like the perfect strategy and wants to make money. So that's the whole reason that we have something called a trading plan, and we did develop systems. So let's say you have a strategy that's like 70% profitable, and it's that's amazing, because most trading strategies are like 50%, like 40%. But even with a 40 or 50% strategy, trust me, you can actually make money. You can legit make money, because if your strategy allows you to get a 1:3 trade, so that means if you're risking like let's say $100 and your outcome is like $300 if you make a profit. So you can find that if you are 50%, like your trades like only 50% profitable. So like think of it like this. So I'm not sure I use pens. Just want to throw it out. Let's just go on trading again. Okay, so let's say your strategy is like 50%, and then let's say you just take like probably like 10 trades. So that's 10 trades. So out of the 10 trades, you lose like five. So five trades. So that means that you lost a total of $500 on those trades, and then the other five remaining trades. So you're using strategy of thingy, one is to three. So that means that for every trade you get $300. Get $300. So that means that if you're gonna time that by three, you're gonna get like what? I think $1,500 if I'm not mistaken. Just check real quick. Um, times it by five. Sorry, if you times that by five, not three. Yeah, it's $1,500. So that means you're getting $1,500 from those trades. That means you make a profit of $1,000. That means you make a profit of $1,000. So even if let's just say you take it down, right? You take it down 10 trades, and then your strategy is like let's say I'm 30% profitable, right? Let's put that over there. So let's say 30% profitable. That means that you only bag you only bag three trades. You only bag three trades. Um, or you lose seven trades. So you lose seven trades. So that equals $100. And then you only bag in three 1:3 trades. That means that you bag in $900. Because you have $300 times three is $900. But as you can see, that you made $200 profit, but then your strategy is only like 30% profitable. So let's just put that there, like dollars. So you see, with great risk management, like out of 10 trades, because you can say a strategy is like 50% profitable, but you can find that your first five trades are losses. So with bad risk management, those five trades can actually take out your whole account, like clean, and then you don't even have like the remainder of your capital to actually carry on trading. You see, so risk management actually allows you to carry on trading. You see, so okay, this is what I was actually talking about. So how do you know which one of those 70 trades basically? So the main aim is to actually stick like the main aim is to actually weather the storm so you can actually carry on trading. Because just an example, I see trading as like a poker game, you see. So when you play in poker, you see, you play against different players with the intention they also have the same intention of making money as you. In order to make money, you need to take it from someone else who makes a loss, right? So the same as like the market. Someone has to lose money for you to actually receive the money that you're getting because someone is buying when you're selling and someone is selling when you're buying. So it's like a transfer of position. So if you take a buying position, someone actually took a selling position, and if they lose $1,000 and you're able to actually take a trade to $1,000, that means that you're actually taking money from those people. And then like poker, I think there's this term that they use. I forgot. The hand always wins. So whether you actually making a profit or the other person's making a loss, at the end of the day, I believe that like the market is actually greater than just lines and charts. There's like an algorithm placing that's in place, and there's bigger players that stand to get money. So those players don't actually care if you, as a retail trader, are actually making money because you're only making probably 1% of what they're getting. You see, and that's why I feel like we're allowed to be to to be in this industry because we don't make that big enough of a footprint to actually make these big money investors like actually worried about us. See, so just like poker, like poker players are actually they calculate their risk. See, they're actually cautious about the moves that they make, and they make sure that each round they calculate how much money they're going to be putting on the table. Because if they go all in the first round, then they don't have money to be playing for the next 5 or 10 rounds. So you as a trader, you need to know that the money that you actually invest and you put in the market, you need to know that that money can sustain you probably for the next 10 trades. So if you put in 50% of your capital, do you think that like the next 9 trades you're going to be putting in how much? You see? So why is risk management important? Because eventually you're gonna have losing streak. Trust me. I thought I was the king for a long time, like not feeling any losses until like it hit me. Like trade after trade, trade after trade. I think like it was for like 2 weeks straight that I like making losses. I was like, damn, what's going on? So you don't know, like your strategy might be 90% or 80% profitable. Because for me, I think my strategy was like profitable, probably about 50. Um, can't say I wouldn't say 90, but it's above 50. So you can find that, let's say it was 60% to 70% profitable. So you can find that my 70 out of 100 trades were like super good. So you found that out of 100 trades, 70 of them were good. But then what happened during those 2 weeks is that that 30% actually met up with me and it killed me. And it killed my confidence. It killed my confidence like at most. But then just because of risk management, it was just like, okay, I think I can weather the storm. But then by the time that I was like starting to wake up, because I'm human, right? So I also have like problems when it comes to psychology because you find that as I said, I thought like I was too good to fail. So you find that I'm like no dude, I can enter this trade again. Like don't worry about it. Let me just risk more. I know I'm always right, and it will hit me. So see, I was supposed to risk $100 for that trade, but now I'm here risking $300 for one trade. See, so you've so that happens, but it's actually good to actually stick to your rules. It's like probably if you have like a book somewhere, write it down, write down your rules and have it next to your laptop or your phone before you trade, and basically tick every step that you have. It might sound like childish or what, but it actually helps because after me doing all that, that's how I actually got my edge back. See, wait, can you guys tell me properly?
Yeah, we
Wait,
can
could
hear
I?
you. Can you hear me?
Yeah,
We can. Yeah, we can hear you. Go on.
okay, okay, okay. Let me go on. Oh, go okay. How are you, Jim?
I'm good, man. How are you?
I'm good, bro. So I was just actually touching up here on some risk management, so yeah, as traders. But then I think this document I will actually give it up because it's like I'm actually covering it during the live state. I'm thinking a free session, so I will be giving out this document when I'm done, and you can just go over that. And this recording will be made available too on the group.
All right.
So
All right.
so I was saying that it hit me like see because you find that like that 30% actually got to me later on and it actually killed me and messed with my psychology. So have a book next to you with all like the rules that you're supposed to be following. So just write them down, like just jot them down, and then every single time before like taking a trade, look down at that notebook, and if everything checks out, then take the trade. But if you're still unsure about that, don't take the trade. So if you didn't follow your trading plan, don't take the trade. If you feel like you revenge trading, delete your MT4 app. Trust me. Like if you feel like you trying to regain money and you just like emotional, just delete the app. Just delete the app, go on a walk, do something, but then don't carry on trading because you're gonna keep thinking that you're gonna be getting your money, but at the same time you're losing your money. And I know the thought of, hey, if I carry on trading, probably I can get my money back. So it'll be haunting you while you like taking that walk. But it's better to be missing moves than to be losing money. Like that's what I believe. Like a missed trade is better than I think a lost trade. See? So the key to being a successful trader is coming up with a trading plan that enables you to withstand periods of significant losses. And part of your trading plan is having risk management rules in place of how much you actually risk per trade. So try to limit your risk to 1 to 2% per trade, but that might even be high, a little high for like like beginner traders, because you find that beginner traders they don't have limits how many trades that you take a day. They just think like, okay, I'm gonna take like probably 10 trades a day, but that's not the case. Like you can actually limit your trades to just 2 or 4 trades a day. Some people who swing traders, they just like place 1 trade a month. So it's not about having a lot of trades. It's about just having enough trades, like high probability trades to make you money. So don't just trade at everything that you see. Trade like when you see that, okay, now this is like a high probability trade for me to get in. So this is a table of someone who risks 2% versus someone who risks 10% to trade. And as you can see, these people they both started at $20,000, right? So at each trade, this person is risking like $400 a trade, and then this one's risking $2,000. So after the second, so all these trades are like losing trades. None of them are winning trades. So just taking the losing side. So after that, this person is dying down to 19,600. This person's at 18,000. Already, this person like a significant loss compared to this person. And then 2% on that is $392. As you can see, this person like going through the account fast. And by the time that you hit trade 19, this one is still on $13,000. This one's on $3,000. So let's say out of 19 trades, you actually lose all of those trades. So this is the case. Okay, let's just put it like this: if your strategy is like 80%, like let's say there's a 20 over here. So if your strategy is like 80% profitable, and then you get your first 20 trades wrong out of 100, this is going to be your account. So would you want your strategy to start working when you have $13,000, $3,000? So that's like something to think about. So if you go through that losing streak, when you start winning, where do you want your account to actually start off? Because there's also this thing of, what if this trade is my winning trade? I set rules. So if like I'm working with like $20,000, right? So let's say at 17,000, 17, okay, no, at $15,000, right? At $15,000, then I drop my risk, you see. So even if I get a winning trade, you see, only when I get back up from $15,000, then I actually trade like normal, you see. And then from $20,000, then I can go a little bit aggressive. But if I'm still below $15,000, my risk keeps dropping. If I reach $10,000, my risk drops even more to like probably 0.5%. See, so probably start at 1% and just start dropping that risk down until I'm back up. See, and that protects you, because you might be thinking that, okay, but then whenever I get a one trade that's gonna bring me back up, that's like the probability of that is very, very low. It's very low, like in the market that we actually in. So it's better to just stick to your risk, because I didn't want to come on here because some people trade differently, see. So I didn't want to come here and like confuse people, like, okay, so this guy is using this, so I must actually change my whole trading strategy. No, because this session was like more likely to actually help, see, more than to like teach new strategies. See, although I can show you my charts, like and basically what I've been up to. See, so with me, like how I start off my day. See, like let's say it's a Monday, so this is Friday. This Friday, this Thursday, It's Wednesday. It's Tuesday, so this has to be Monday. So basically, how I start off my week, I usually just miss the whole of Monday. Like I don't trade the whole of Monday. I just let Monday create my liquidity for me, and then after that, Tuesday, that's where I actually start doing my whole trading. You see, and then Tuesday usually gives me like a direction for me. I use Tuesday as a direction, and then I always hope for Wednesday to actually take out Monday's liquidity. Sometimes not even that case gets left behind, depending on the situation, depending on the bias that we have that day, that week. You see, so everything in trading, like one advice I can give that can work for all strategies are dependent on a bias. So basically, a general direction for trends. So if you can find the trend for that week, I kid you not, and you stick to that trend, your strategy will work more than 50% of the time. Because you know if you bearish, you're only looking for sells. You're not looking for buys. When you see buys are retracements, and then you're gonna sell those retracements. You see, so if you bullish, you're only looking for buys, and those sells are just retracements that you can just buy. You see, so that's just a simple thing that you can use with your strategies. Is that just find a direction for that week, like look at your high time frame. Just that I do it differently. I just look at my high time frame once, and I have a level that I'm going to. So only once I hit that level, then I actually start looking at like where we could go and look at the buys at that time. So other than that, like ever since we hit this low on Dingy on Nasdaq, I've just been looking for buys. Ever since we hit this low, I'm just looking for buys one way. I think I only sold. Did I sell? I don't think I saw. I didn't sell. Yeah, I didn't sell. Like the retracements, I was like, no, I'm not gonna sell that because I know they're not long term. I want long term moves because as I was explaining, like before we start the session, you see, what happens that I look for like I don't I don't look for a lot of trades. I look just for a few proper trades. So you found that this was a proper trade and this was a losing trade. And then later on, then I got a winning trade, right? Yeah. And then today, I got a lucky trade. You see. Um, so you find that like during the week, I only took one loss of Nasdaq. That's just because that I don't look for many trades. I look for my ideal setup, and then when my setup occurs, then I start trading. I don't just trade off like any low that I see or whatever. No, I look for proper trades, just so just so I can minimize that risk. And there's also another thing, like the more refined your strategy is, the less risk you take on. Because as I said, 90%, if you have a 90% accurate strategy, then you're only going to be taking on 10%. And if you're trading 100 trades a month, that means you're only going to have 10 million trades out of the 90 trades. So it just depends on your strategy too. Because your strategy actually marks out places that where you're supposed to be buying and selling. And then after that, your biggest competitor is your psychology, because psychology messes you out. Psychology psychology is the reason why if you buying over here, you see a stop loss getting hit, but you still have the idea that you're going to be going up. Still buying over here, buying over here, buying over here. And what the market likes to do, it likes giving you a sense of you like, yeah, you're gonna win because you find moves like this where probably you're gonna be buying here. You see that little pop up, and you know that price is gonna go your way. Then you get stopped out. Then you just see candles forming again. Like I want to buy down here because in a lower time frame, this looks like a good move. And with you thinking that prices are gonna go up, it's chai. It goes back low. See, and then same here. You over here, you're still thinking that we're going lower, right? You'll be selling over here, but the market's gonna take it out. See, so the market has places of like liquidity where you're not supposed to be buying or selling, and it's just up to the strategy that you're gonna be using that actually like makes things easier for you. Just that with me, like the same things I look for in my strategy that actually helps me out. See, like those in the mentorship understand. Like over here, they know that we'll be seeing a fair value gap over here, and then we'll be seeing equal highs over here. So we already know that we're looking for buying, and it's been bullish. You see, and it's just like that because even with the tools that I use, like when I started, it's like it's just more confirmation. So my strategy, the strategy I use, has more confirmation thingy for me. Because if I'm looking at this, if I'm looking at this and I'm just looking at the fib and I have that 70.5 retracements and I have a fair value gap right here. See, then I know for sure that we are buying. And like I know that we're gonna fill this up or come to it, and then we're gonna be buying. So that's how I like trading. I like to have like a lot of confirmation, and I like to understand what's happening at that time. Because for me, when I actually started trading, I was just so intrigued on like what's going on, and I never like to trade not knowing that why. Like, okay, I understand that you have a thingy level over here that's supposed to react, and then the price is going to go up, but then why the price is going up to what? Like, where is it going to? So that's why I always strive to actually understand what's going on more than just trading blindly. Like today was just unpredictable. I won't lie. Probably you as a thingy with some other strategy, probably you understood what was going on. Probably you just traded the breakouts, because I could have simply just came and said, oh guys, I just waited for the breakouts, and then after the breakout, I actually put in buys. But then for me, it's like I don't see um a level where prices were buying off for me to actually consider this as a buying trade. I took this trade because I was aiming for the symmetrical price swing. See, I was aiming for that, so I was like, okay, cool. Like, if I'm trying out this trade, then it would be a dumb move. Like, I shouldn't have traded like during this time. But then it was actually okay. It was actually a winning trade because over here on the account, it was like at least it was like a nice trade, and I actually enjoyed that move because sometimes the thingy the market is gonna be thingy, it's gonna be kind to you. It's gonna be kind to you, and that's just part of the market. See that sometimes it's kind to you and sometimes not. Because even if you look at this, right, this is called an equity curve, right? Our first trade was a losing trade, about $300, right? And then I went back up, and then my second trade was also a losing trade. See, I think this was like 6 trades, right? So 6 trades, and I was like, I think I was risking $100 for some of them, not all of them. So I went down, but then this was actually between 2 days. I think it was 2 days. Yeah, it was 2 days. Yeah, it's 2 days. So you find that it was three this side, three this side. You see. And then from there, like today, I was just like, okay, cool. I'm down $700. It's fine. As I say, you have periods of where you take that trade, and then today I actually like basically took like 4 trades out of like this because yeah, it was 6 trades. See, so after that, I took like 4 trades, and then I actually came back up straight, and then I was actually able to pass this challenge like quick 2 days. So if you thinking of like if you think about it, like in a period of 2 days, that's like $600. That's like close to uh, let me just do the math real quick. That's like 10K. So if you look at it like what I said at the start of the session, I was like, it's better for you to have like capital, like a great deal amount of capital. Because if you're gonna use proper risk management, it's gonna take you time to actually grow that capital. You're gonna get frustrated that you're not reaching your target as fast. But then this is like a $10,000 account. and this was not even 10% of the account. This was like this was like 6% of the account. This was 6% of the account, and nothing big. It was just making 6% of the accounts using proper risk management, and that's 10K. Now imagine if you're gonna be doing this every single month, like once a month. Once a month, you'd be doing just this like 10 trades. So actually, out of 10 trades, wait, after out of 10 trades, three of my trades were bad. Wait, I just want to calculate this real fast. Okay, so this is two trades. So two bad trades, one good trade. So two. So basically, I could safely say, like, from here, that my strategy is like 60% profitable because here's here's the growth. So I was actually kind of right about me saying that it's above 50. So I can safely say, judging from this like period, it's 2 days, and like me taking these trades, like my strategy is out of 10 trades, I know I can get six right and four off. So now using proper risk management, you see, it actually helps because you find yourself in, okay, instead of me using like bad risk management, like my two trades was first, because remember when I said that you don't know whether that 40% of your strategy that's not good, you don't know where those trades gonna come for you. It came for me at the start of the challenge, two trades back. I was like, okay, cool. Two trades back, do. And by the way, this was actually a mistake. This trade over here was actually a mistake. I was using the platform, and when I was using the platform, you know how you have the trade button in your left hand corner. So me, I was actually trying to like move the cursor and just look at the left, but then I actually went on and clicked the button, and I didn't want to trade anymore because I was actually back up. I was actually back up at break even. But then it happened. Like I can count like probably over 10 times. Like safe to say over 10 times that I've entered trades by mistake, where you find that probably I enter your trade on my phone and I'm just looking at the chart. But it's just because that button is there and you're moving, just accidentally click. And then what happens there, that's where your psychology comes in force. Because now you don't want to exit the trade with a loss. You're just waiting for the trade to come back to your point, and it doesn't come back to your point. So you'll find that actually happens a lot, you see. So this is we're actually going through this with the mentorship students, and hopefully by the end of this month, they will all have passed phase one. And this over here is my first one. This is my page. See my account currently. When I think I called Colad. So with this account, like I did not want to trade this account anymore because it was like so bad because I was just withering. This was the withering part of the stopped. But then I was like, okay, I got it. I got to this point, so might as well like take just take it to the chin. Just keep it moving, because if you're gonna start focus on the negatives all the time, and when it comes to trading, you're gonna lose all your faith in trading. You see, you're gonna think that this thing does not work, but hey, it actually does work out. For me, it was more of proving a point to myself, and when I proved the point to myself that hey, this thing actually works, like I think trading changed my life for me. I can safely say that trading actually changed my life for me. One, financially. Second, um, like people actually were doubting the whole trading journey before. Now they're just like, hey, dude, you see, and like, but then couldn't you just see me at the start of my journey without actually going through these hurdles and just be supportive? So trading actually got me that respect that I actually wanted from a lot of people. So me sitting like I actually posted a message in the group, and I was like, now I understand why a lot of people hate traders, because find me a profession where you could sit like in front of a laptop, and I have to wake up. Like if I had to go to like latest I can wake up is that thing is at 1 p.m. That's the latest I can wake up because I know I'm gonna wake up, catch the New York session. I'll probably sit through because that's okay. Let's say eight to 12. I just need to sit through 4 hours of my day, get my train closed before London closed, and I'm gone for the day. So now that means like you're basically working 4 hours, like from Monday to Friday even. So if you count the hours that you actually working, so four times five, then you times that by 4 weeks. So roughly in a month, you're only working 80 hours. 80 hours, basically. You're only working 80 hours in a month. So that's roughly 3 days and some change and a few hours. So imagine you coming up to someone like I trade. And like what's trading now? I just sit in front of a laptop for like roughly 4 hours in a day and I'm done. And you can I know a friend of mine, he trades. He only puts in one trade a month. The dude actually just bagged like 20K of just one trade in a month. And he's like, he's done trading. I'm like, damn. So you telling me you just put in one trade, you bag that, and you just carry on. Because he has an FTMO account. He has a $600,000 FTMO account. So he just makes sure that he gets like $10,000 or like $15,000 a month, and then he's gone. Basically, he doesn't even make 10% of his account because if he had to make 10% of the account of $600,000 times 10%, and then you are times it by the exchange rate is 0.59 mistake. So if he had to make 10% of his account, his $600,000 account, it's like 900K. And he's not even aiming for 900K, he's just aiming for 200 and he's done. So one trade in a month and he lives his life like free. So for me, when I saw trading, I'm like, no, this is like a game changer. If it's done right and you're consistent enough and you put in the work, you, you can literally be living like free. You can be traveling, you can be buying whatever you want, but it just depends on how much time you have to devote to trading. See, so I just want to take you through gold. So I think this is the last chart I'm going to show, and then probably just wrap this up. So at the start of this lesson, I actually showed this. I'm actually aiming for gold to actually go at least to fill in this imbalance. As you can see, it's still consolidating. It's after lunchtime, so we should be seeing movement. Probably by 3, we'll probably see it's called last kick of the dying horse Friday, so we'll probably be seeing last movements. I just hope gold actually goes up, yeah. So if I was in this trade currently, because we broke above this first high, my stop loss would literally be right now. So now that means it's risk-free trade, and if I want to enter another trade, then I would enter it like in profit. Then use the same risk. Like if I was risking $100, I'll risk $100, but taking it to yeah. And that's actually the benefits of risk management. So you know which trades to take, which trades not to take, so on and so on. And if I'm looking at the chart over here, this is my week. And I actually sent these screenshots out on the group. And well, this is something that we were looking at during with the membership group. But these were the two trades that I actually took over here. And these were beautiful trades. This was a trade, this was a trade, the 2K to 12K trade. This whole swing. And I was aiming for this low, yeah. But I was filling up the fair value we have first. See, so that's why my TP is like at the fair value we have. See, because what I teach is that like when you trade, you gotta have rules just to keep you like proper. So your rules always tell you when to exit and when to enter, because the exit is as important as the entry, because you can find that you don't exit at the right point and then it comes back to bite you. See, so this is just typical market structure. Um, just looking